Hey there friends, welcome back to episode 26 of that live portfolio update where we're growing 50k into $1 million. I can't believe we're already at 6 months of this. Feels like a lifetime, but I hope you guys are having fun. So as promised, we're going to have an extended nugget part because I skipped out on it last week. So if your beer's up here, go and grab it, sit back, relax, I'll do all the work, you just chill. But without further ado, let's jump into it. Alright, benchmark time. So how did XJO fare this week? Well, that looks better. A ripper week, up near 3% for the Monday to Friday trading week. Exceptionally good on Thursday, up 1.2% for the day. Well done, mate. So how did our stocks do this week? Look, I'm actually happy to end relatively flat. We had an absolute shocker of a day Tuesday when our portfolio was down near 4% for the trading day. I thought we were going to have to sell a couple of our positions, but the comeback was strong, ending only 0.08% down in capital. Ive Group gave us some dividends, giving us a final return of 0.87% for the trading week. Can we please appreciate the capital gain of IGL, even after it went ex-dividend? Dude, I love you. Okay, as you might remember last week, Capral dropped 15%, but they gave us back 7% this week. Might have something to do with all the construction guys going bust, I'm not sure. But Clearview clearly didn't have fun this week, dropping 8%. I'll need to check this one out and report back, but it's still in line with last month's close. So here's all last week's buys, holds and sells. The ones that changed are as follows and why. No bloody changes! That's a bit of a shock with this crazy week, but please be careful with Clearview as that clown is borderline. Please remember guys, do your own research. Okay, so since inception, we have a pure capital gain of negative 2.03%. The portfolio now has a dividend return of 5.23%. This gives us a total return of positive 3.20%. Now last week, we were worried about losing RVR, and let me tell you, we almost did. The same concern is around that stock with its 6% capital loss. We'll have to keep an eye on this next week. Alright guys, today's nugget section is going to be on Ive Group. Man, I hope you get the pun that is happening right now in front of your eyes. We'll do the normal thing here. We'll have an overview of the company, the management, some graphs, and some numbers. So basically, Ive Group, as some of you might be already aware, is one of Australia's biggest paper users. They started back in Balmain, New South Wales in 1921 with a local newspaper, and they just kept growing and transforming since. The company evolved into a commercial printing operation and listed on the ASX in 2015, and is now Australia's most diversified marketing and communications company. Now this bit is word for word from the annual report, so bear with me. Ive Group is specialising in creative data-driven communications, integrated marketing, production and distribution. They bring together the capabilities, specialists and technology needed to make customer connections seamless. What a mouthful. But wrapping up in a nutshell, they get a customer on their books, they market their products through various platforms from old school catalogs to online shopping, and then they organise the logistics and connect the consumer direct to the customer. It's a great little syndicate they have going on. Do you agree? Alright, let's check out the management. Now straight up, there's 4 main dudes in the exec key management team. Now let's have a look at Jeff and Paul first, as they seem quite significant when you dive into their ownership. So you first, Jeff, come on up, buddy. So this guy is the exec chairman, and he was appointed when Ive went public. He has 30 years experience in the marketing and communications sector, which is a great stint. He was the MD prior to them going public back in 2015. Jeff is also a director of the Caxton Group and Caxton Print Holdings. I'm pretty keen to check what Caxton is all about, as it has popped up a bit in my research. Jeff also sits on the board of, here we go, the Lysocrates Foundation. I hope I'm saying that right. He was also in politics from 05 to 08, and he holds a Bachelor of Economics. Sounds like a pretty diversified dude. He owns a modest stake in the company worth $26.5 million at time of recording, which is almost a 9% ownership. It's great to see some skin in the game. Then we have Paul. Come on up, buddy. Paul is an exec director, also appointed back in 2015 when they went public. He was actually from the banking and treasury game, where he was in management before moving over to the printing game about 25 years ago. He has been a director since before they went public in 2012. Paul is experienced in this role already, as he has also been part of the Caxton Group family office for over 15 years. See, Caxton again. This guy has a Bachelor of Economics and also has a similar, very modest stake of the company worth over 26.5 million at time of recording and 9% on the dot of the company. So I noticed they were both Selig as last name, so I gave this a quick Google. It turns out it's a pretty wealthy family that owns the private Caxton Print Group but bought modest stakes into the Ive Group. If you know more history on this, please leave me a comment below. Are they brothers, sisters, cousins? I'm intrigued, but I must move on. Now, when talking management, you must give the CEO some spotlight. So your turn, Matty, but far out, well, you're a hard man to track down. I looked through the annual report, there was no blog like the other guys. I even went to the website to find out what you're all about, but I still couldn't find anything. Maybe let the Selig dudes know, but then I turned to Stock Doctor and even they didn't have my back. I just couldn't find a bio of you, so back to Google I went. I found out you were appointed back in August 2019, so I did some digging into the announcements. I found this ASX release, so let's just run with that. So basically, Matty was the Chief Operations Officer since 2014, and the opportunity to become CEO had arisen, and he took it. It was a seamless transition, which is great, as old Jeffy Boy noted in this release. He has been with the company for over 20 years. Wish I had more to tell you, but let's just check out the annual report if he gets his own mention when this video goes viral and the Selig guys chuck him in there. Alright, some numbers, hey? Look, let's do a bit of a holistic view of the numbers without the deep dives. Let me know if you think they look good or not. Spoiler alert, they look good to me from an overview, but these are from Stock Doctor, the affiliates below if you like what you see. Cash flow. Now this is amazing. Remember they listed in 2015. And ever since then, they have been increasing those cash flows consistently from the start. Even through the COVID cough, they increased over the 3 years of 2018 to 2020. Not many businesses can say they did this. You can see the cash at the end is huge on June 21, but I believe this is due to a divestment of a business segment they sold off. The info for this is detailed in the annual report if you're interested. So profit and loss, say top line. Massive growth year on year from 16 to 19 with a slight taper off in 20 and 21. But this also came with a nice taper off in operating expenses. To me, this could be the flow on effect of winding a couple of operations down mixed with a bit of uncertainty around COVID. But nonetheless, the numbers still look appealing, but would recommend diving into them, especially around the abnormals, as they are some decent numbers. Okay, balance sheet. Now in the land of QAV, we really like to see the increase of equity happen year on year. Again, 16 to 19 was great with a drop in 20 with a bit of recovery in 21. But when you break that down, I only agree with this if they are increasing retained profits. Like for example, if Ive Group kept capital raising like I read in 17, I believe their share capital will keep increasing, but at the end of the day, we will be diluted as shareholders. Do you agree? In 21, they did a buyback. That is why you can see a decrease here. Also, with these, I only agree on buybacks when the share price is at a low price, which it was at the time. Otherwise, we wouldn't have entered, right? Value investors, yeah? All right, that's enough numbers. Let's check graphs. Let's start with the 5-year monthly. Holy moly, check out that peak up top on the last day of 19 was near $2.50. Then it was like one of those vertical drop rides at a theme park. It was plummeting to lows near 49 cents. It's actually worse on the daily, but there's still a loss of around 80% of capital if you went peak to trough. Now with our pretty lines, we had a buy-in price at around $1.25 in November 20 and a sell going up currently at $1.33. We entered up here in September 21 as one of our first stocks, if you remember when we first started, and almost lost them in the same month. I'm glad we held on for the ride, as recently they have been doing exceptionally well. At time of recording, we are up near 34% in this position compared to the STW for the same period. We just need a few more winners like this guy and we can grab some great traction. Okay, I'm parched, guys. Let's close this out. All right, so our cash account is still at $3632. So with our 3632 in cash plus 75048 in stocks, takes us to an overall value of $78,680, which is about a negative 0.07% total portfolio gain from last week. It was pretty flat, but we should see some contributions and some dividends hit the bank next week, and hopefully some capital gains. Well, I hope you got through your beer and you enjoyed that episode. I'm going to go grab another one and get this edited. You have a lovely weekend, guys. Now, you know the saying, keep healthy and wealthy. See you guys.